Hi guys, welcome back to the channel. My name is Dave, and today we're talking about options and Nvidia. Why? Because this coming Wednesday, 5/22, we have the World Series, the Super Bowl of earnings calls when Nvidia announces and decides to let the rest of the world know how the world is doing. And I want to be a part of that. I want to make my call or my put and pick out some options, dress it all up, and see how we do. I have to be a part of it. It would be like Tiger Woods not being part of the Masters. I got to be in there. So we'll see how it goes. But it's either going to be one of two things: eternal sadness and desperation, or me gloating and bragging, and which is I'm voting for this one. I'm hoping for this side, obviously. So let's see how it goes. A little bit of a mini series. So this is beforehand, place trades, and then agonize. If that is what you're looking for, please stick around. Whoop. So here are the facts. Today is Friday. Next Wednesday, 5/22, is when Nvidia announces earnings. The price has been driven higher and higher as we close in on earnings. After all, they have been crushing earnings for the last several quarters. So that's probably part of the price action that we've seen recently. So we're up near an all-time high. And how do you play this? Well, the first thing is I'm long Nvidia stock. I'm a big fan of this, and I don't think it's too overvalued. I think it's fairly valued almost. Looking forward at the forward PE ratio and what they're expected to do going forward, I don't think it's too expensive. So I'm looking at adding to my position at this point. So selling a put makes a lot of sense. Buying a call makes a little bit of sense. Doing a put credit spread makes some sense. Just depends what you want to do. But for me, I'm going to keep it probably pretty simple. I was hoping that I'd be able to layer these in as well. But earlier, I think this week, I actually sold a put and I closed it out. I'll show you that as well, just because the price keeps going up. So I've been closing those out, hoping for a little bit of a pullback prior to earnings, but I don't think I'm going to see it. So let's sell a put. But for me, this trade really boils down to expected volatility due to earnings being excessive compared to what I think will be realized volatility. Beyond that, I have a little bit of a checklist that I do when I go through option trades like this, and if I can check it all off, then I'm good with the trade. So this is a good time to point out that this is just for entertainment. Hopefully you get some benefit, especially for those that are new to options. And if you are, I have plenty of additional option videos on my channel, so like and subscribe. And in the end, I might make $1,000 or $2,000 from these trades. Not a huge number, but a good way to activate some money that is sitting in cash and make a few extra bucks, harvesting volatility in a relatively conservative trade from a probability perspective. Meaning these are low delta option trades, meaning the likelihood of the options expiring in the money is low. However, with any trade, especially on a single stock, there's always going to be some risk. So my checklist for a simple put is pretty simple. So it is a good place to start, in my opinion, if you want to get into options. First, you must love the stock. You want to own it. So if earnings are poor and the stock plummets to your strike price or well past, you still want to take it home with you no matter how ugly.
You're gonna live with me now. Huh? Yeah, I'm gonna take care of you.
In this case, I'm already an owner of Nvidia stock, and I plan to keep those shares for the long term anyway, right? So that's my reasoning. Second, you have the funds in cash to purchase the shares. I keep cash for this type of reason. My cash makes money while sitting in a money market, and I can boost that money market return with a simple strategy like this. Third, you like the buy price. That is what you're going to pay for this, which will be the strike price of the sold put. You can treat the strike price almost like a limit order. And I am not a stock analyst, by the way. So please do your own research, especially with individual stock trades like this. Fourth, you like the return, which we will look at how I determine that here in a moment. And fifth, and honestly, if the first four are solid, this one is not as important with a cash secured put. You have an exit strategy. And that might be as simple as I'm taking assignment if it falls to my strike price, I don't care. Or I'm out if I collect 70% of my premium. Just don't get caught up in the hype of any stock and think bad stuff can't happen, because it will, so be prepared. Okay, so let's set up this option trade for Nvidia. And in this case, I'm using E-Trade. I also do a lot of option trades on Fidelity, but in this case, it is E-Trade. They should look quite similar. So ticker symbol NVDA, and I am selling a put. So my action is sell to open. I'm selling one contract. Again, I've got lots of information on my channel here if you are confused by any of this, but I'm just going to walk through it rather quickly. So selling one contract. I might layer in a second contract next week before earnings come out, depending on what happens between now and then. But just going to do one today. Expiration June 14th. I give myself a little more time. That's about 4 weeks from now. Past the earnings date, right? So a lot of things can happen between now and then, and I've got my plan in place of what I would do. But if Nvidia does come out with really good news and the stock price takes off, then I'm going to be able to capture the majority of this income really quickly after that earnings report comes out. I'll be able to close this out more so than if I would sold very close to like next week's expiration, next Friday. So giving myself a little more time gives me a little bit more money and action in this if the stock does take off. And even if it trades sideways and the news is just kind of bland and nothing really happens, the implied volatility is going to just, right, it's at IV crush, it's going to be gone, and I'll be able to still collect a nice amount of this $800 or so from this trade. So that's kind of the general game plan. And if it declines, well, then I have to have my plan of attack, which is, hey, I like the stock, and at a strike price of 780 minus what I'm going to receive, it'll be a break even of around 772, and again, that's something that I'm okay with. So you have to be okay with that. So selling a put, bid and ask is 805 to 830, but they also have this little refresh quote, which is very nice, so you can kind of see and you can continue to refresh it and kind of get that information current. So I always set a limit price. In this case, I'm going to do a limit. You could do a market and execute, and it'll probably give you around 810, 815, but just as a precaution, I like to set my own limit order. Right, and in that case, I would do something like 810 in this case. Okay, so good for the day, estimated commission, and estimated proceeds. So that's it. I'm going to place my order and follow through with the rest of this. So there it is, place order, and when we come back, I'll lay this out in my calculator, and we can kind of see what this all looks like and why I picked that strike price, and just how this trade should sit. All right, now just to put a little structure around this trade, I'm going to use my cash secured put calculator, and I'm going to plug in all the data that I had from that trade. So I've got the date, number of contracts for Nvidia, and that expiration date of 6/14. When I executed this trade, it was at 933.50 for one share. I'm selling a put at a strike price of 780. So that means it has to fall 16.4% for it to be assigned to me at expiration. So that's a significant move ahead of earnings, but there's lots and lots of volatility in a stock like this. It has lots and lots of momentum. So don't let that fool you. It seems like a lot, but it could still occur. So yeah, again, just getting comfortable with the numbers here. So total premium that it ended up executing at, remember I put that limit order in there at 810. Executed at 822.48. Give me some extra lunch money, sushi money. So yeah, that's where we sit right now. So the put cost collateral, if I have to buy those 100 shares at 780, I would need to plunk down $78,000 in order to buy those 100 shares. So that's a significant number on a stock with a very high, trading at a very elevated price, right? So 29 days, that's about 4 weeks. The return on those 29 days would be just over 1%. If you annualize that, just over 13%. Again, there's that collateral. Now down here at the bottom, I like to conceptualize or think about what could potentially happen with this particular trade. In this case, first scenario is the stock stays above the strike price. That means the option expires. And I probably wouldn't even see this. Again, I'd probably close it out early, but if you do hold it all the way to when the option expires and it stays above the strike price, then you're going to collect all $822.48, and that gives you that annualized return of 13.27% if you repeated this every 29 days all year long, right? So that's one scenario. Good, right? We like that one. Now, if the stock price drops, and let's say you just pick a number, 700 in this case, so it drops significantly past my strike price, then I have to cope mentally with what just happened, right? It drops down past my strike price. I get assigned those shares. In this case, I have an $8,000 loss with the stock now sitting at 700. So are you okay with that, right? Because that could potentially happen. It could go a lot lower, right? Maybe it goes to 600 or 500. So good. Get your mind set for what could potentially happen, and that could result in a pretty significant loss pretty quickly. So that's when the stock price drops significantly. And then down here at the bottom is my break-even calculation, so I kind of understand what my actual true break-even is. And how do we get to a break-even point for this particular trade? We have our strike price and we subtract, after you multiply this times 100, or you divide this by 100, then you're going to get to 771.78. So that's the price at which I'm completely flat, right? I've received $822.48, right, in premium, and I'm being assigned those shares at 780. When I adjust for that, my break even, when I hold those shares, is 771.78. So that's my break even number. So those are kind of the three scenarios that could happen. So that's my trade in a nutshell, and where I sit right now. When I follow back up with you, we'll see how it turned out.
That's right. So what we're seeing in data in the options market is traders are positioning for around a 10% move in Nvidia stock after its earnings Wednesday and through the end of the week on Friday.
They say there's the estimate, especially when it comes to revenue. The estimate for revenue is about 24.5 billion, basically 24.6 billion, basically 24.57. But there's that whisper number, and Bank of America was out with a note saying that they see those revenues coming in at 26 billion.
What's a whisper number?
Yeah, so as Carter pointed out, the implied move for just the day of earnings is a little over 8%. For all of next week, the options market is implying that Nvidia could move about $90 higher or lower, just over 9%. I think if you're going to play this kind of range-bound thesis and sort of a muted potential up move is the one that you are hoping is going to be most profitable, one of the things you could, of course, do is try to sell some of the elevated premium by, for example, selling next week's 840 10-20 strangle. So you're selling the downside put and selling the upside call. Of course, selling those options naked like that carries unlimited risk. So the way you hedge that is by buying a longer dated strangle of those exact same strikes. I was looking out to September, which captures, of course, not only next week's earnings, but the one that's subsequent to it. That way you get to capture some of that decay that could happen in the near dated stuff while still having some longer dated options to protect you. And the peak profits would be if you get that move to the upside.
Happy Tuesday afternoon. I've decided to go and revisit the original sold put that I had and roll it up a little bit. So if you recall, when I first sold this, I collected $822.48 in premium. That was on Friday. Today's Tuesday, just a few days later. The stock price has gone from $933.50 up to $949.44. And because of that, I've collected about $350 off of that original premium. And the delta's dropped, and I want to roll back up to something closer to like a 15 delta. Still very conservative. Try to collect a little bit more premium. Instead of selling an additional put, in this case, since the stock price has gone up so much, or not that much, but enough that I've collected a decent amount, about 46% of the premium already. It makes sense for me to roll it up and get into a little bit richer value. So refresh my quote, and we're going to see, we're going to buy to close that position, same one, 780, and I'm going to roll up 50 points to 830, so I'll open my new contract at 830. And for that, I'm going to pay around 480, and I'm going to collect around 1100. So adding some additional credit. So again, we can do net credit here, and you can see bid 620, mid 645, ask 670. So how much can I get? It's going to be close to that 645. So I'm going to reach for 635. Okay. I'm going to preview that, and I'm going to place my order, and I'll give you the details. So that trade rolled me up from the 780 strike to the 830 strike, and closer to that 15 delta that I'm looking for. Still conservative, but added a little bit more premium to the trade. So on that initial trade with that 780 strike, I opened it and closed it for a profit of 345.97. And now I've opened up a new position that has a premium on it of $1,110.45. So we'll see where we go from here. So it is Wednesday afternoon, about 15 minutes till the closing bell, and I've decided to throw in one more option trade, actually two legs here. The first leg are two long puts. These are my catastrophe puts, just in case Jensen comes out and says everything's falling apart, it's a disaster. So I'm buying to open two for this coming Friday, $800 strike price. Again, very weak trades here. Puts about 175 bucks a piece, but I'm also selling to open one put out to June 21st, $800 strike price, same strike price, collecting about 800 bucks for that. So I'll net out 440 bucks. That'll go into my account, and if everything plays out, I'll keep that, or the majority of it. And I imagine that tomorrow these long puts, these two that I'm purchasing, will be worth about nothing, and that hopefully I'm picking up a little bit more income with this $800 short put. We'll see how it goes. All right, 4:15 Wednesday. Earnings should be coming out any minute. I'm gonna ignore it. I'm gonna go golf. That's what I do. Tiger might drive it a little bit farther than me, but I hit it wider. Not like wider, I mean like wider than Tiger Woods. So they're annoyed. If I actually hit a good one, what will happen? Out. Finish the swing. Oh, it's me. Remember. All right, so Nvidia did crush their earnings report like many people suspected. And just like I crushed that tee shot, okay, actually I suck at golf, but I do enjoy it. But anyway, lots of good news from Nvidia around things like data center revenue, transition to their new Blackwell line of GPUs, and beats on the top and bottom line. So they had earnings per share of $6.12 and revenue of $26 billion. What was that whisper number again from Bank of America?
But there's that whisper number, and Bank of America was out with a note saying that they see those revenues coming in at $26 billion.
Good guess, Bank of America. Wow. Suspect? Maybe. And of course, these nice transcripts you see here are easy to find right here on Seeking Alpha. I am a Seeking Alpha affiliate, and I have a nice 20% discount for you down below for anyone looking for a good stock and or ETF research tool. But what does all this good info mean for me? Well, it means tomorrow, based on after hours pricing, I should be able to close my options for a small percentage of what I originally sold them for and keep the vast majority of the premium. Yay me, all hail the whisper number. So it is Thursday now around noon, and I'm going to close out my two positions, that $830 put and that $800 put. I did have those long puts that I added as well. They pretty much collapsed to zero. I closed them out first thing this morning for about $4 or $5. That's all I was going to get. And now I'm ready to close out these other positions. So you can see I've collected most of the premium, 90% on this one and 86% on the premium on this one. And I'll run through an example. I often get asked the question, when should you close? And I'll run through an example of that here in a minute. But just understand, for me, it is time to close these positions. No need to keep them open to collect this last little bit, which is, it's $104 and $108. But I'll show you why I'm closing that here in a second. So to close this one here, we're going to trade and we're going to hit close. That'll bring up a screen like this. I'm going to refresh my quote here. You're going to see Nvidia is currently at $1,049 and I have a put. I'm buying to close my one open position here that's at a June 14th 830 strike, and it's a put. You can see the bid and ask, it's really tight right now, so we're just going to do a market order and we're going to close it, and it's going to cost us about $109 to do that. So preview, and we're going to place that order. Now, one simple way to determine if you should still be in this trade, if you should be closing it out at this point, is to run it back through the put calculator that we started out with. So if we update to today's date, same expiration, current stock price, same strike price, knowing that it's going to cost us this much to close it or this much to add a new position, right? We would receive about $110 if we sold another put. Over the next 23 days, that's the total premium that we have potential of collecting. That results in a 2.1% annualized return. If you remember back to the beginning, we were around 13% for the first one. I rolled it up, and I think that one was closer to 18% or so. So because all the volatility has collapsed out of this trade, there really isn't a whole lot of meat left on the bone. So for me, I'm looking at this saying I can get into something else that is better for my money at this point. So that's a simple way to determine, hey, should I close this now? And in this case, it's a simple yes for me. So now I want to summarize all my trades and see how I did. Did I make any mistakes? Well, sure, you could say it was a mistake that I didn't sell close enough to the money. Sell a higher delta put, make a lot more money. Heck, I could have sold in the money. I could have sold in the money puts and done phenomenally well. But we're sometimes looking at risk as well. So, with my money that I sit on the sidelines, I'm often just trying to add a few percentage points here and there along the way. And when I see opportunity, maybe reach for a little bit more. So I feel pretty good about how it all turned out. And I started on 513. That one was one that I didn't show you, but initially I sold a 740 strike, collected some premium, and the stock took off, and I closed that out, and I netted $249.97. Kind of did the same thing on 517 and closed it out a few days later on 521, and I made $345.97. And then everything else from there, I closed this morning on Thursday around noon, and you can see the profit from those. So I made $1,006.94 on the one put. Then I added that protection, those two long puts, and I lost $351.06 on that one. But I also made $685.95 with the put that I sold that coincided with those two long puts. So overall, $1,937.77. And for me, I track all my trades like this. I've got a big spreadsheet. I put them all in there, physically enter all this information because it kind of keeps me engaged with everything that I'm doing. So overall, pretty good. Happy with that. I've got a lot of sushi dinners to look forward to with this. $1,937.77. Don't forget, you got to pay the tax monster as well. So that was kind of a fun video to make, showing the life cycle of an option across earnings with an exciting stock like Nvidia. If you have any questions on it at all, just ask me down below. But the intent here is to show people, especially those that are new to options, that you can safely use things like puts if you're comfortable with the ID and you get all the information. And if you're looking for that type of information, I've got a lot of it on my channel. So like and subscribe. And again, any questions, just hit me up. But I really appreciate you watching, and we'll see you real soon. Take care. Whoop.